Hello everybody, it's me the Boss Hog, and I'd like to walk you through my portfolio as of the week ending the 8th of October. Some big moves this week, obviously super volatile. I also chucked some money, hopefully didn't catch a falling knife, but we'll see. Anyway, let me take you through it and you can judge for yourselves. Alright, so I guess mostly a good week. You can see here I'm up £920, so that's basically a percent if you look at my portfolio at the moment. But it does conceal some pretty big movements. I've ordered these roughly in the size of impact. So EPD is my second, oh no, hang on, it's my fourth largest holding now, but it's pretty close between the second and fourth. That was plus 8%, so that's pretty awesome. Hun is my largest holding, it's still 15% of my portfolio, give or take, so plus 4% now has an impact. Then we've got National Express minus 6%, that's my joint second largest company now. And BMY is also my joint second largest. You can see they're minus 6% and minus 4%. I did make some moves on them this week, as you'll soon see. Fever Tree got a bit of love this week. Polymetal finally got a bit of love this week on favourable commodity pricing movements and dollar as well. Then we've got a couple of smaller ones here that also had modest impact, but material enough for me to want to call out anyway. So overall, obviously, good thing, but there was a couple of pretty significant moves, all things said. I made some pretty big moves this week on shares that I consider materially undervalued. I've called out a couple of them there, but you'll see some more in just a second. I also had a big capital injection this week, which is definitely worth talking about. So I put in 5.2k extra this week. For anyone who follows me, I've been doing £800 a week for a little while, dropped it down to 400 just to sort of fill up my wife's ISA. And here, so we've got 400 plus 5,200 basically there, the capital added being 5,600 for the week. I had to actually run this past my wife because, our savings account is pretty bare. But I basically bought forward this investment. So instead of putting in an extra £400 a week into a separate portfolio, I basically bought the weeks until the end of the calendar year forward, which worked out 5,200, and that was really just because I wanted to make a bit of a move on some of the big tech, which looked a bit, as cheap as it's ever going to get, as well as a UK growth company that I think is having a really unwarranted pullback. So again, we'll touch on that in just a second, but a brand new portfolio full of big tech and growth, so that's pretty exciting. And then last but not least, pretty good week on the dividends actually. It's my second sort of three-figure week. Now I would say most of my dividends for October are in already. I've just got a couple left and they're sort of on the modest side, but still actually not a bad month at all considering September was so good. Now in fairness, some of my dividends for the month are sort of fairly late from my brokerage, but still these all add up, right? You can see Huntsman there notably. My largest holdings, so even though it's just a 3% yield, that's per quarter as well, so it's not trivial. Sentiment as well, at one stage I had like 1,000 shares. This is a very high yielding gold miner. I've been sort of trading with them a little bit, as you can see, and likewise Antofagasta as well, copper miner. So I've been having some fun with the miners. Yeah, good fun. But yeah, you can see here, so broadly, you can add up those things, right? Capital added plus dividends plus sold will basically give you my bought net figure with a few quid for, a little bit of cash here and there. But yeah, that's everything. Without further ado, let's have a look at the buys and sells this week then. All right, so to start with here is the orange highlights. This is the new portfolio. It's in a general investment account, GIA, which means it's outside of our tax efficient wrappers. I'll get to that in just a second in terms of what that means, but basically I've set up this portfolio for big tech and growth stocks. Nothing spicy though, kind of solid growth stocks, right? And the main reason for that is because the general investor account is kind of, I might need to draw on it in the future, so I didn't want anything too speculative. But because the amount in this account isn't likely to get taxed anytime soon, it's fine to sit outside of my ISA, and I kind of just wanted to do something with what's effectively spare money until it's potentially needed early next year for a house investment opportunity that I might be pursuing with a business partner / friend. So yeah, so separate outside of the ISA. It means I can get access to it nice and easy, and it should be relatively low volatility as far as shares ever are low volatility. So yeah, Graham's Workshop might be something that the Americans especially haven't heard of, but this is the owner of Warhammer primarily. Impressive numbers, got some really exciting growth opportunities, and it's had like a more than 20% pullback over the last couple of weeks that I think is super unwarranted. So I decided to make a pretty big move actually for them. Could have been slightly more patient here, you know, went all the way down to 96. But honestly, anything under, I don't even know, like 110 isn't terrible for Games Workshop. Anything under 100 for me is fantastic. So 98.70 here. Again, I could have been slightly more patient, but it doesn't feel bad, basically. So that tops me up to 40. I already had 6.5 in that account. And then we've got Amazon. Again, I would consider that the cheapest of the big tech at the moment, maybe except from Facebook. But to be honest with you, I don't really want to touch Facebook. I think it's the most vulnerable for political interference. And to be honest with you, I don't love it as a business model. I don't even use Facebook myself, so I'm just not really a Facebook advocate in any way. Then we've got Apple. I wouldn't say Apple shares are cheap, but I sold out of Apple at 148, so getting back in at like 140, 139, that felt okay. And you know, I think it's probably Joseph Carlson has made me most bullish on this stock. I didn't really get it till him, to be honest with you. So I just, you know, for me, it's okay to get back into it at this price point. Walt Disney is very expensive. I wish it was like 140 a share. You know, I'm getting in here at like 170, I think it is. So definitely not a bargain. But again, it's just such a fierce business. And once it gets up and running as well, you know, cruise ships and theme parks and it's just so scalable. Again, it's kind of difficult not to get behind that. So again, it's not exactly cheap. In fact, it's very expensive. But you know, these are good shares that I don't really expect to go too far. And hell, I mean, if it drops down to 140, I'll have another chat with my wife, I guess. And then last but not least is Microsoft. So I sold out Microsoft at 291 a few weeks ago, buying back into Microsoft in the 280s. So again, I guess a little profitable turnaround. And again, I don't actually consider Microsoft particularly cheap, probably less overpriced than Disney. But you know, I just want these big, safe tech stocks, so fine. And they all sit separate, those 5 ones that I've just listed there. But you'll notice actually that my big move this week was Bristol Myers. I can't believe how cheap this stock is, or to me it seems very cheap. Now, I'm not a pharma expert, but I've done a bit of reading. I think the pullback is based on 2 factors, you know, Medicaid reform, which, you know, if you calculate it, will have an impact on BMY even if it passes. It probably will get watered down, and I think it's probably overdone. And their top 3 drugs are all due to go generic at the end of the decade. You know, one starts next year, then one in 2026, I think it is, and then one in 2029. But, you know, they've got such a good pipeline as well that, you know, this is just the nature of pharma. And for me, you know, it's trading at, I think, 7.6 PE when I was buying it at sort of the 57s. And, you know, 3.5% yield. And I think that's too good to miss. So I made a big move actually with Bristol Myers here, sold as much as I could. Or, you know, profit took in other areas, as you'll see in a second. And yeah, I think it was a good buy, honestly. I think in a few years to come, this is going to be kind of a relatively safe part of my portfolio, to be honest. And I'm just going to be able to enjoy it for a little while. So I'm probably maxed out on my BMY now. I have like 275 shares in total, but you can see here I added another 114. I think I averaged here about 58.5, but yeah, it was, I'm absolutely fine with that. I consider, honestly, anything under 65 for BMY not bad. So again, I'm fine with this. My average, by the way, is 60.42 in terms of dollars, so I'm definitely sitting on a sort of 5% loss for this at the moment. But again, it's absolutely fine from my perspective. And yeah, I think I picked up a bit of a bargain. National Express was already a very big holding for me. It's joined BMY as my second largest holding, but it's been up there for a little while this week. Again, I had to sell some stuff, as you'll see in a second, to buy, how many to buy? 556. So I rounded it up to 5,000 shares. Again here, 227, 228. This is just such a steal for me. I think this is like a 330 to 350 share. And to be honest with you, between National Express and Bristol Myers, I can't decide which one's more underpriced. Probably National Express just. But, you know, I've basically put my money where my mouth is, and these two now are significant holdings to me, about 12% of my portfolio each, so very, very big. But again, I really think I got a bit of a bargain here. I regretted not picking up shares in National Express the last time it dipped under 230, so this time I was like, you know what, I regretted it. I've already done my due diligence here, I understand the company, I'm good to go. And that's exactly what I did, so I feel good about that. And last but not least, I'm back into WH Smith, which is a retailer in the UK primarily, although it has been branching out notably into the States. Again, super well-run business. Its earnings at the moment are a little bit depressed because its main margin stores are airports and train stations, and obviously a lot of those are still recovering. But it's not in any existential danger. It still has airport and station shops that earn money but just less impressively. And to me, it's just trading at a pretty big discount compared to what it's worth. And I would say it's kind of should be about £20 a share. Pre COVID, this was like £24 a share for a very good reason. It's basically best in class. Like, look at its return on investment and things like that. It's just better than almost any other retailer. I think since that they had CEO Kate Swan turn it around a few years ago, it's basically just been sailing along very nicely. And again, for me, anything under about 16.50 is has a nice margin of safety for me. So that's why I'm back in it again. All right, I think I've talked enough about my buys this week. If anyone does have any other questions about anything I haven't highlighted here, feel free to ask standard stuff. But for now, let's have a look at what I had to sell to buy some of this stuff this week. Okay, so on to shares I sold, and again, I'm going to color code it orange and yellow, but they're not related to the buy slide at all. So we'll start with the orange first of all. So these are positions that I trimmed that I still fundamentally believe in, and that was specifically to free up money for National Express. So I sold 15 out of 555 shares for EPD, so still a massive holding. It's my fourth largest holding. It's about 10% of my portfolio, maybe close to 11, so still pretty big. Part there. Now, Fever Tree, I did have 245 shares and sold 45. And to be honest with you, I didn't really get the best price. I've been selling under 23, probably worth about 24 a share though immediately. And depending on how it recovers after COVID, could be a bit higher. For me, I'm into Fever for the fairly long run. And but saying that, I just think it's closer to being fair valued than National Express is. So I needed to get money from somewhere, and that was why I decided to trim. Now, Kaki, CACI, but I prefer Kaki, and Vistra, I'm more or less exited. So Vistra, I'll start with. I actually exited from that fully. I've been a bit disappointed with the performance of this one. Although I made sort of 7% overall, it just really didn't move in the way that I was expecting. I was in for this for like a medium-term trade. I just felt like it had a bit of an overreaction after it had to take on some debt following some bad weather. But I just got a bit tired of it basically, and decided that I wanted to free up money for Bristol Myers. Kaki here, I still like Kaki. I managed to get a good sell price here for like $270. For me, I think it's about 290 shares. So again, might have left a little bit of money there on the table, but I felt like Bristol Myers. I just wanted some money to throw at it basically, so I made that decision. I teased on my buy slides that like as well as depositing 5,200. I also, fixed a mistake, and that mistake was GAN. So I don't really talk about this company very much, maybe because it gives me cold sweats or something, I'm not sure. But this was really one of my earliest mistakes, and I've been bag holding it for, 8-9 months now. It didn't get any prettier, to be honest with you. It was my mistake. I went in too hard. I didn't really understand the company well enough, which is like an IT gambling company. And to be honest with you, after I'd built my stake, I then went on to an earnings call, and it was just like amateur hour. I was well unimpressed with what I heard. Now, the last 2 quarters have improved a little bit, but it's not really moving at the kind of speed I wanted it to. It was a fairly risky position, but I just decided I wasn't seeing enough. And I decided to crystallize a loss basically. That 25% is about £500. So it's not going to break me, but it's like my nastiest loss. So I didn't really feel good selling it, but to be honest, at the same time, it kind of does. I just felt like I was able to free up some money, chuck it at Games Workshop, which is a quality company, and just felt better for it basically. So it is what it is. It was my mistake, and I got an okay price for it, but I can't see it going anywhere too fast. Again, maybe I left some money on the table here. I know some of the people in the Discord still hold this, but I decided it wasn't for me any longer, so decided to exit. Now, Genie is actually in many ways kind of similar to GAN, but better. Everything about Genie is better. It's further along, to be fair, in its development, and it's slightly different in that it does kind of like big data. But again, it does a lot of the stats basically to underpin gambling events, and then sells that as well as some other stuff as well. So it just seems better from that perspective. I feel like I've actually got a relatively good understanding of Genie, and I've been sort of buying Genie under sort of $17 and selling it ideally in the 20s. This time, however, it was a much quicker turnaround, just 5%. But again, 5% in 2 weeks, if you did that consistently, you'd be pretty happy. So I decided to sell almost all of my Genie stock. I think I kept one just to keep a good eye on it. But again, I was okay with this. Decided, it was green. It's a very volatile stock, to be honest with you, but I do think it's probably worth the low 20s. So again, I might have left some money on the table here. But again, Bristol Myers. So just decided to throw some money at it. Anyway, I think to be fair, the last week I made some big moves. I felt good about all of my moves, honestly. You know, getting rid of GAN is going to feel better in the long run. Opening up my portfolio, or creating this growth and tech portfolio, also feels pretty good, and bringing that money forward again. I think I timed it relatively well, kind of Monday evening and Tuesday morning. So I'm already up a few percent across those positions, except from Games Workshop, which again I did a bit more knife catching. But again, no problem getting in for Games Workshop for 98 quid. That's definitely going to be profitable in the long term. So I'm actually really happy. Very volatile week, stocks all over the place, really. But broadly speaking, I mean, 1% in a week, I'm not going to knock it. And yeah, we'll see how my big moves turn out. But as it stands, I now have about 50% of my portfolio across 4 companies. So Huntsman, EPD, National Express, and Bristol Myers. So those 4 companies are very overweight in my portfolio at the moment, but essentially I believe in them. And I would say I was considering selling Huntsman this week because it hit my target price of $32. And I did think about it. It's in the same portfolio as Bristol Myers as well, so I was tempted, but I really want to see what this activist shareholder is going to propose. And again, I think it's a quality company, so I don't really want to go anywhere needlessly. If like the guy does have a good thought for how it's going to move forward. So either way, I'm just going to sit on it for now, see what he said, and then decide from there. But for now, I've still got a very large holding in Huntsman. Anyway, I think I've waffled long enough. That's what I've been up to this week. Any questions, down below. Otherwise, I've been the Boss Hog. Thank you for watching, and good luck with your investing. Bye for now.